Good morning or good afternoon, depending on where you're calling in from. Thanks for joining us today. We have a presentation with Glenn Mullan, CEO of Val-d'Or Mining Corp, which trades on the TSX-V under the ticker VZZ. As some of you may know, I am a director of the company, so just wanted to disclose that in advance of the presentation. And as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And there will be a Q&A section, so feel free to put your questions in the box at the bottom of your screen. With that all out of the way, I'd like to introduce Glenn Mullan. Hi, Glenn. Nice to see you.
Nice to see you, Deborah, and thank you.
It's been a while since we've had an update, so looking forward to hearing about some of the big developments in the company over the past year.
Yeah, I'm anxious to share some of it with your listeners and viewers.
Sure. Well, why don't you give us a bit of an overview of the company and tell us what's been going on over the past year?
You bet. And first of all, a shout out right back to Deborah from Adelaide Capital. We really appreciate the opportunity. We had talked about doing this several times over the past few months, but there have been a few recent catalysts that make it more appropriate to do so now. And so I really do appreciate you sharing the opportunity with us. And you've been a terrific director too, by the way, which is why she's now the lead director. So I thought I would share that with any interested parties as well. The caption on top really describes. There you go. The caption on top really describes our theme. We try to turn ideas into royalties. And it's easy to say, it's harder to do, but we do it in a few discrete and mutually exclusive steps. And that's what I want to share with interested parties or stakeholders or hopefully a few shareholders. Because to my knowledge, it's quite unique, the business plan, and we've had good success with it in the past few years. You may notice that the ticker symbol, VZZ, we've always described ourselves as the ZZ group for the simple reason that other than being the last letter of the alphabet, it's also the one letter that Anglophones and Francophones, English and French Canadians, say the same, and that Canadians say different from Americans. So we always liked ZZ as the last two letters in our tickers. And so that was the origin 20 years ago with the first one, which was Canadian Royalties, and segued into Golden Valley Mines and Royalties, which evolved also into Abitibi Royalties and Val-d'Or Mining Corp, and all of them having ZZ as key parts of the ticker symbol. Deborah mentioned forward-looking statements. We're not shy to make a few, but that ties into the disclaimer or safe harbor statement. We usually draw more attention to it than most people do, most of our peers anyway, for the simple reason that it's a reminder to myself and to our technical and management team that the information that we share shouldn't just be quick and constant and regular. It should also be accurate. So don't be shy to hold management accountable when you don't think that that's true. So a few things about our business model and why it's different and why we think it has had success consistently in the past. And I'll talk about that in a few more slides. It begins with the obvious notion of developing basic geological ideas. All mines come from the rocks. All of the rocks have certain constraints and properties. We try to focus on what we think will lower the risk factors. We acquire properties based on what we think is geological merit, mostly based on historic exploration and our own expertise in this particular area. And I'll talk about which area that is in a few slides as well. And then we test those ideas, testing the geological hypotheses and doing that through modestly funded exploration programs. So ideas, acquiring properties, evolving into transactions, and testing the properties. So that's the first part of the model. The second part is, if successful, we leverage that into royalties, NSRs. And how do we do that? We do that through transactions on properties, joint ventures, option agreements, or straight sales. We've done several purchase agreements, which create NSRs as well, usually retaining shares or cash in other companies. And that's partly how we fund our treasury and how we reduce dilution to our share capital. And ultimately, we consistently monitor and manage the royalties and those investments that move with the vagaries of the market and some commodity price swing. We're not purely a gold company. We work in gold, base metals, and have worked in energy minerals in the past as well. So a few words about historic links and how Val-d'Or Mining came to be. I mentioned Canadian Royalties a few moments ago. The original ticker symbol was CZZ. It was listed on what used to be called the Alberta Stock Exchange, if anybody can remember that. And ultimately, within 2 quick years, graduated to the Toronto Stock Exchange through a series of successful exploration programs. In fact, we turned a $1 million private placement in 2001 into a multi-billion-dollar deposit over 5 years. And that's still producing. It currently has over 1,000 employees. It's based in the northern reaches of Nunavik, Quebec, the very northern tip of the province, and currently consists of about 7. And I say about because now it's owned by a Chinese private company called Jialanjin Nickel Corp. And the private company does not have the same disclosure obligations that public companies do. They do have a terrific website, and it's worth visiting as much to view the infrastructure, considering we started with a pretty modest camp and 4 employees the first summer, and they have over 1,200 on site at any given time now. The second foray into exploration, following the acquisition by the Chinese in 2010, was Golden Valley Mines and Royalties. And Golden Valley is a more traditional exploration company in that it's focused on the Abitibi Greenstone Belt. So therein comes the geological ideas and sticking with what has worked. And I'll describe that in greater detail in a few moments. But we really like to stay not so much close to home, but where we can afford to work and do effective work without breaking the treasury. So Golden Valley evolved quickly and successfully over a few years to the point that it did a triple spin-out plan of arrangement. And the triple spin-out, to my knowledge, still is the only time that's ever been done. That was in 2011. And that was where we created a royalties company and 2 explorers, one of which is Val-d'Or Mining Corp, giving the presentation today. So those transactions were actually very accretive to our shareholders. If you add up the 3 transactions, Golden Valley Abitibi, nearly $500 million, and that was just under 2 years ago, and Canadian Royalties at its peak was also a $488 million company, ultimately creating significant value for our shareholders, not just the founders and not just the management teams and not just the insiders, but shareholders. And, you know, it's worth restating. Golden Valley Mines did its IPO at 20 cents on the Alberta Stock Exchange. It ultimately did its last trade at just under $12. Abitibi Royalties, after the plan of arrangement and spin out and listing on the TSX-V, traded at 30 cents first trade, and last trade was over $25. So those are the rewards for shareholders who are patient and management teams that are successful. And past performance, of course, no guarantee of future success. But you know, we assume that most of our shareholders share not just our enthusiasm for exploration, but our patience, because that's a requisite in the exploration business. Our project area and our focus right now is Quebec and Ontario. And it's probably worth mentioning that historically we've strayed pretty far from that. Parts of Africa, and certainly distant or more distant parts of Canada, Saskatchewan uranium projects, to name a few, and other projects beyond the Canadian border. But right now, and one of the main reasons is fundamental economics. The Canadian-US dollar discordance or disconnect is so significant that raising Canadian dollars to spend US dollars doesn't seem like a great plan for a high-risk junior explorer. So right now, Canada looks good. And so does Australia for very similar reasons. But our geological and geographic focus are Quebec and Ontario. Currently, our land holdings total about 75 properties. The word about is deliberate. It's always in flux. Claims are being dropped or let lapse, subject to work commitments, subject to tax considerations, and subject to commodity prices. And similarly, claims are always being acquired or staked or restaked, subject to availability and budgets and so on. But right now, our focus is approximately 2/3 in Quebec and 1/3 in Ontario. In Quebec, 45 properties in the southern part of the province, 3 properties in the far north in the Nunavik region. In Ontario, 27 properties, including 2 NSRs, and a little more about the geographic spread and why we work through this particular area called the Abitibi Greenstone Belt. And you can see the Quebec-Ontario border more or less in the middle of this map and the distribution of the squares being producers, past and present, scattered through the Abitibi between more or less Chibougamau, Quebec to the east, to and beyond Timmins to the west. So our current focuses, our foci, would be Kirkland Lake, Ontario, and Matachewan, Ontario to the west, and areas just north of Val-d'Or, and areas near Lebel-sur-Quévillon to the northeast. If you look at the map in greater detail and notice the gold dots or circles, those are the gold properties held by Val-d'Or Mining Corp. For the most part, 100% owned. And if you notice the green triangles, those are base metals prospects that are held in Quebec or Ontario. Most of them are copper zinc, VMS, volcanogenic massive sulfide projects. Some of them are nickel copper, PGE, platinum group element projects. We're not shy to test different ideas and different commodities. And we do have a few rare earths and some similar energy minerals projects on the table. We like to test new ideas and use our own funds to test those ideas to move them along down the food chain, find partners, and leverage that into transactions that return capital to our coffers and minimize the dilution to our shareholders. So it's worth mentioning why the Abitibi? Well, probably the second most prolific environment in terms of dollars produced on the planet Earth. Only South Africa has really eclipsed, in terms of gold production, the Abitibi Greenstone Belt. But the Abitibi has consistently exceeded expectations and survived the different vagaries of the markets for over 100 years, has produced over 200 million ounces of gold. And it's amazing if you look again at that border, the Quebec-Ontario border, and consider that however it got surveyed, in some office in either probably Toronto or Montreal back then, 100 years ago, that they cut it almost exactly in half in terms of the mineral wealth. Almost as much gold or dollar value has come out of Ontario as Quebec. And the same thing for the distribution of commodities. So Ontario has produced slightly more copper zinc thanks to the gigantic Kidd Creek mine and complex near Timmins. But Rouyn-Noranda certainly contributed its share from projects around the town of Rouyn-Noranda in the caldera of the same name. And in terms of gold distribution, probably more gold producers on the Quebec side, but bigger gold producers on the Ontario side. And that's still true today. You know, even a company like Agnico Eagle, Canada's largest gold producer, is notable in that 2/3 of their annual gold production. And they work in Finland, they work in Mexico, they work in Northern Canada and Quebec and Ontario, but 2/3 of their current production comes from the Abitibi Greenstone Belt. So certainly a prolific, well-endowed geological environment. And what we like are the historical statistics. Over 100 mines, over 100 gold mines have contributed to the Canadian economy. And about as many base metals producers, past producers, current producers, and development projects, copper and zinc. So certainly this area exists principally because of the contribution to the economy produced by the mining industry. And another fundamental attribute for shareholders is that a lot of the world is not so mining friendly. Quebec certainly is. Ontario certainly is. So these are two areas for which mining has contributed positively to the communities, and that the communities tend to be big supporters of the mining industry. So on to some specific details. NSRs, net smelter returns or net smelter royalties. Our strategy is to create the royalties from these geological ideas. So on the table, on display right now are 4 NSRs that we've created over the past few years. Ducros, Powell, Luc Bourdon, and Calamity Hunter Mine Group, and Mona Lisa in Quebec. There are 4 different situations. We have one copper zinc VMS project, another copper zinc gold hybrid. We have a pure gold project near Matachewan, Ontario, and a nickel copper platinum group element project in Quévillon, Quebec. And we'll talk more about those in a moment. The tables are kind of boring to look at, but what we're really trying to show you is that these are 4 successful examples of having taken ideas and converted them into royalties at very little to no cost to our shareholders. We're trying to avoid dilution to the share capital while we create value at the back end. And that's a collection of royalties, not forgetting that the prior transactions in our previous companies were all sold on the basis of royalties. Royalties in Northern Quebec, royalties in Quebec, the Abitibi Greenstone Belt, and royalties in Ontario. So on with the show and a few more details. Another key component of our exploration strategy, and again, focused on minimizing dilution to share capital, are recent transactions that we've done, one of which is the Eldorado option. So we've done 4 different agreements with Eldorado Gold over the past 2 years. Most of the properties, 9 of the 11 properties, are based in Ontario, and 2 of them are in Quebec. So our newest option agreement with Eldorado Gold is a joint venture that requires that they spend $20 million over 5 years to earn up to 80%. Actually, $20 million to earn 70%, and then by contributing or producing a PEA, preliminary economic assessment, they can earn an additional 10%. So this agreement covers 4 properties, all in the Matachewan area of Ontario, about 50 kilometers west of Kirkland Lake. So the Baden Prospect, the Plummer Prospect, Island 27, and the Matachewan Prospect, collectively requiring a $20 million expenditure. This was our first year in that agreement, and I'll talk more about the work that we've completed and that is ongoing and what the next stages look like. But perhaps a few words about why Eldorado Gold looked at a company as small as Val-d'Or Mining Corp to establish a footprint in northeastern Ontario. Well, if you consider the land holdings around Val-d'Or, where their producing mine is, they're producing right now from the Lamaque mine in Val-d'Or, as well as from their operations in Turkey and Greece. But it would be very difficult for them to envisage increasing their footprint in the Val-d'Or mining camp for the simple reason that Agnico Eagle are dominant here and have been for the better part of 50 years. Agnico have a very well-established business relationship with most of the community. They've had great success on their focus operations, including some that required a lot of patience, such as the Goldex division in Val-d'Or. But they also produce profitably from the La Ronde mine, which is a gold, polymetallic, gold, copper, zinc VMS deposit near Cadillac, Quebec. And they also own 100% of the Canadian Malartic and Odyssey mines near Malartic, Quebec. And so it makes it difficult for a company like Eldorado Gold to establish partnerships with junior mining companies because Agnico Eagle have a 50-year head start. Plus, the other junior mining companies that are working in the Val-d'Or mining camp have had their own success and have been able to attract significant capital themselves, including O3 Mining, part of the Osisko Group, Cartier Mining, Probe Metals, to name but a few. And so if Eldorado Gold have ambition to establish themselves in the Abitibi Greenstone Belt, therefore Ontario looks very attractive. And we were one of the largest landholders in northeastern Ontario by virtue of a series of transactions we had consolidated since Val-d'Or Mining Corp went public and through a series of staged acquisitions that date back over 20 years. And so it didn't happen overnight, but we did have a very large land package, which was very similar geologically to the deposits and the geology in the main camps of the Abitibi Greenstone Belt, including Kirkland Lake and Matachewan, but on the Quebec side, Rouyn-Noranda, Cadillac, Malartic, Val-d'Or, and Chibougamau. And so that was some motivation to Eldorado Gold to consider looking at maybe northeastern Ontario with similar enthusiasm. So another agreement that we did, for which we're in the second year now with Eldorado Gold, requires that they stage expenditures of $10.5 million over 5 years on 4 properties. 3 of them are in Ontario and 1 in Quebec. They're the operator of the property in Quebec, given that their mine and operations, staff, and a key part of their management are based here in Val-d'Or. It made good sense for them to be the operator logistically and efficiently for the Perestroika project. But the other 3, Murdoch Creek, Cook Lake, and Claw Lake, are all in northeastern Ontario. And our pitch was, we put them together, we've done the previous work, we've held on to those properties for more than 20 years, and that we deserved a shot at being the operator from the outset. So we're now in our second year as operator on this option, and I'll come back to those in a minute in terms of the work that we've accomplished. This is a map showing the general holdings around the Kirkland Lake area. You can see the Murdoch Creek. I'm not sure if my cursor shows on this presentation, but it's in the middle of the map. The largest property, Murdoch Creek, another one that's contiguous, meaning they touch on the north side, called Victoria Creek. Another property shown to the northwest called Blue Mountain. And then the Cook Lake project, which is more or less on strike with the main producers in the Kirkland Lake main camp, just west, being located in Grenfell Township, and various other holdings still held by Val-d'Or Mining Corp. So these are the properties that, for the most part, we've optioned to Eldorado Gold, while we retain several other properties and continue to own 100% of those prospects, which are the subject of ongoing discussions. And those discussions typically lead to transactions. So stake the properties, minimal expenditures, transactions, use other people's money to fund the exploration and test the ideas. If successful, at vesting, creating royalties. And if not successful, the properties come back to Val-d'Or Mining Corp, who retains 100% ownership and continues the work ongoing. So a third agreement with Eldorado Gold, which requires that they spend $3 million over 5 years, is on 2 more Ontario-based projects, Blue Mountain and Victoria Creek, both projects being north of Kirkland Lake, Ontario, and we're now in our second year on those projects. And the fourth and final agreement, in terms of thus far, anyway, chronologically, Eldorado has to spend $1 million on this one small property called the Perestroika West property, being contiguous to the aforementioned Perestroika project. This one they're also the operator of. So if you've been counting and following via the maps, Eldorado are the operator on 2 of the projects. Both of them are in Quebec. And Val-d'Or Mining Corp is the operator on 9 of the projects, all of them being located in northeastern Ontario. And to show you that we're not just gold focused, this is a nickel, copper, platinum group elements project. And I like to use it to illustrate some of the value in our transactions to Val-d'Or Mining Corp shareholders. For one thing, it's large, over 280 claims, over 15,000 hectares. Part of our transaction required that they pay consideration in addition to, this was a straight sale. They bought the property in return for an NSR and the issuance of 9.9% of their company on the date of signing. So that was 3.5 million shares of Quebec Nickel, QNI. And the reason we like to talk about this transaction is it's the one that's created the most drilling in the shortest period of time since the transaction was signed. So in 2022, they drilled over 20,000 meters. amazing progress for a company that had just been listed in the same year. They had raised over $7 million at that time and had the good fortune of beginning their exploration following up on an outcrop discovery. And it's actually worth a few words about the prospectors, the Fortin brothers, who will be here in a few weeks to do a property visit. These brothers came through our office 10 or so years ago, dropped a bag of rocks and asked if we'd assay them. In return for doing that, all we asked was a courtesy of a call if they liked the assays and wanted to consider a transaction. Not an obligation, a courtesy. Wasn't a right of first refusal. We want prospectors to like us and to consider us, especially knowing that the competitors, including much larger, especially on the gold side, can easily eclipse us with funding and upfront payments. We want to be seen as prospector friendly. So they liked the assays. We did a follow-up due diligence visit. Our assays, our geological team, were actually better than theirs. And from there, Golden Valley at the time, Golden Valley Mines raised a bit of funding and did a 4-hole drill program, which also had some success. Unfortunately, nickel prices were quite soft and the market wasn't impressed. So ultimately, this property gravitated into Val-d'Or Mining Corp, who sold it to Quebec Nickel. And we're quite proud of the transaction because that was 2022, I just mentioned. In 2023, they were successful in again raising significant funds, over $7 million. Their plan at the time, earlier in the year, was to drill again over 20,000 meters. Unfortunately, this property is located smack dab in the middle, dead center of the area most impacted by forest fires through the past summer. Town of Quévillon, Quebec was evacuated, and actually the forest fire restrictions required that the drill be demobilized and that the teams leave for nearly 2 months, slightly more than that. But the drilling recommenced in the last 30 days, and they've announced a plan to drill 5,000 meters dedicated on the showing. So you can see that on the right of the map, copper, nickel, PGE, and gold, the Fortin showings. And we're quite enthusiastic about that. And I invite any listeners to read their December 2022 press releases describing in great detail the actual intersection. The best one is unforgettable, over 11 meters of 1.45 copper and about the same in zinc, 1.45 to 1.55%. Terrific values for what appears to be a magmatic segregation nickel copper PGE occurrence. And this is virgin. It's something that had not been discovered or worked historically, located on a highway. You can see that on the map as well. So a few last words about transactions and I'll wind things up. This is a very small project, 2 mining claims in Matachewan, Ontario. And I say 2 claims almost with a grin on me because most of them are covered by lakes. But we were fortunate to actually have a very good neighbor, Lee Barker, pretty much a legend in the mining industry, Toronto-based, but certainly well known for the diamond exploration at the outset in Lac de Gras, Northwest Territories, back around 1990 or so with Chuck Fipke and so on, Diamant Minerals. And Lee Barker evolved into Southern Era and very many other successful diamond explorers. But Lee's actually a great fan of mining folklore and figured out that Harry Oakes, Sir Harry Oakes, the founder of 3 of the gold mines in Curtin Lake, actually had a 4th project that he had acquired late in his career in Matachewan, Ontario. And he's continued to use the Oakes name in his own disclosure. So we were fortunate to partner with Lee, who earned an interest and leaving us with 1 million shares of Spartan Resources and a 2% NSR. So that's another NSR we created from claims we staked through a transaction that yielded shares and hence revenue to the company without spending any money on exploration, without breaking down our share capital. And a final transaction with Juno Corp, Toronto-based, Robert Cudney Group. This is the Ring of Fire in northwestern Ontario, McFolds Lake. And pretty enthusiastic about Juno for the simple reason that they're working privately, going public, increasing their exploration expenditures. They've spent over $5 million in 2023 And as far as we can tell from their own modest disclosure to date, because they're not public yet, significant results, mostly geophysical signatures that they're assembling with a plan to do a larger drill program. So again, a similar transaction, and our property was large, 288 mining claims, over 5,000 hectares. The targets are copper, zinc, silver, VMS. We retained 9.9% of Juno on the date the transaction was signed, and a 1.5% NSR. So another NSR created without funding the exploration from Treasury ourselves, and the same model that we use again and again. So as we wind things down, a few words about our shares outstanding, share capital, etc. Just over 80 million shares. We've been around for 12 years, 52-week range in a pretty modest and challenging mining market, trading between 6.5 cents and 15 cents, currently at 7.5. Market cap, just over $6 million. Our largest shareholder is Gold Royalty. That was by virtue of them having acquired Golden Valley Mines and Royalties and Abitibi Royalties. Golden Valley had previously been the largest shareholder of Val-d'Or Mining Corp by simple virtue of having spun it out. So that was the plan of arrangement I mentioned previously. Insiders currently holding 4%, and I think I can say with a straight face and without much of a grin, make a forward-looking statement that I expect to see that increase imminently based on some announced transactions. If you read our recent news releases, we're waiting for final exchange approval to change that number a little bit. So in any event, insiders continue to be significant shareholders. Our top 10 list is populated by our own management and board, and the same supporters who've helped us in our prior companies, including the Quebec institutions and funds. So a few words about the management and the board. Dr. Jens Zinke, long-standing associate going back over 20 years. And Jens and I have been working together from Canadian Royalties, Golden Valley, Abitibi, and now Val-d'Or Mining Corp. Jens is the architect, which is a modest word, but I would say the genius behind a lot of the business development. He's our chief operating officer. Rico de Vega has been our chief financial officer for the last 5 years. And that goes back to the term with Abitibi Royalties and Golden Valley as well. And our board, consisting of, other than myself, Louis Doyle, was formerly the head of the Montreal Stock Exchange before the mergers with CDNX and then the TSX-V, etc. And Louis provides a lot of corporate governance expertise and really just good, sage business development experience and advice. Deborah Honig, who I can't say enough about, not just because she's the lead director, but also contributes significantly through her own perspective, contributing from Adelaide Capital and her own network. And, you know, that was fundamental. We were looking for somebody that was based in a much larger population center than Val-d'Or. And certainly Toronto is the mining mecca in Canada. And so Deborah's made significant contributions that way. Luke Schuchuk is our youngest board member, graduated from Queen's in Economics and Commerce a few years ago, is the son of Bob or Robert Schuchuk from Calgary. Bob was probably our biggest financial supporter going back for 25 years. And again, the same path, Canadian Royalties, Golden Valley Mines, Abitibi Royalties, Val-d'Or Mining Corp. And Luke is blazing his own trail, finding his own way, currently living in London, England, and advancing his own career path in capital markets. And the aforementioned Dr. Jens Zinke from Dresden, former East Germany, but living in Montreal, Quebec, and Jens being a very close associate and probably the person I speak with the most, other than my wife. And a few words about the exploration programs, and then I'll wind it up and open to any questions. We try to spend as little money from our treasury as possible. That goes to protecting the share capital, avoiding dilution. The money we do spend typically goes towards generating projects, concluding with claim staking, so not much in the way of drilling through self-funded exploration. Partner-funded exploration, Well, 34.5 million if you total up all the agreements from Eldorado Gold over 5 years on 11 properties. 34.5 million. Consider how much dilution to our share capital that would be at under 10 cents to Val-d'Or Mining Corp if we even could do it. So that's significant in the way that we construct our transactions. They don't earn an interest unless they complete that spending. QNI Quebec Nickel spending over 5 million this year, and hopefully will have completed over 20,000 meters, same as they did last year. Again, impacted by the forest fires through much of this year, but currently drilling 5,000 meters on the key showing. And so we're not focused on any one idea, any one single flagship. It's a basket of properties, gold, orogenic deposits, different structurally controlled domains, gold, copper, zinc, nickel, copper, PGEs, properties located in Quebec, properties located in the very far north of Quebec. This is the Nunavik region. Always in discussions with competitors and looking for other opportunities. And I think with that, I'll wind things up and open it up to Deborah and any questions.
Thanks for that overview, Glenn. I have a couple questions myself. So can you remind me again, how much ground does Val-d'Or hold across the Abitibi in both Ontario and Quebec?
I checked last night for the current details. So it was 77 properties total, consisting of 71,764 hectares. Now that's all properties. So the 100% owned properties, the properties that are in joint ventures, the properties that have evolved into NSRs. So that's all properties. About 2/3 of the property holdings are in Quebec and 1/3 in Ontario.
And of those, which are the most advanced?
Well, there's different ways to look at what advanced means. So our property in the far north, the Shootout prospect, Val-d'Or Mining Corp acquired it through some legacy transactions with Golden Valley, but has not done any work on it itself. However, Golden Valley did a number of years ago, and that property had over 6 million spent on it. And because of the current interest in battery minerals and critical and strategic minerals, becomes a key discussion point for us. It's located in Northern Quebec near the aforementioned Canadian Royalties, but more importantly, perhaps near Glencore and the Raglan mine. And that last slide, this one, shows an actual drill intersection from that property. And what you're looking at looks like it was drilled through the block of an engine. It's nickel, copper, platinum group elements, massive sulfides. So that one we have high expectations on. I'd call that somewhat advanced, given that it was an idea, geophysics, geology, prospecting, and then drilling. And we expect the next program to be much more significant. But further to your question, I think the Eldorado Gold joint ventures collectively represent an attractive opportunity. Now that we're concluding our second year and looking at our third year, and that their total spend requires 34.5 million, I think we can see or expect to see some significant excitement come out of those transactions. Which one in particular? Hard to say. There are thousands of assays at the laboratories right now, some soil sampling, prospecting samples. A lot of the historic work is being reassessed in view of what we do know about the assays being received in batches right now. But certainly there's no reason to think that the properties in Kirkland Lake will not yield similar results to some of our competitors and neighbors in the same area and to what we're seeing around Val-d'Or. And not forgetting Quebec Nickel Inc. They have drilled or will have drilled over 40,000 meters in the past 24 months, have raised over $14 million. That's a pretty significant expenditure investment into what was a grassroots property only 2 years ago. So I would say that one has moved down the food chain as well. But we already have our NSR. We already hold our equity in the vendor. So, the transactions are what they are. Grassroots, small companies, they have their own struggles. Larger companies like Eldorado Gold certainly bring a different dimension, financial capacity. Most of our partners haven't had that luxury over the past years.
And of the projects that are currently being explored that you hold royalties on, or NSRs, or any existing claims to, which ones are you actually operating?
Which NSR properties are we the operator on?
Of your entire portfolio, like which of the projects are you currently operating?
Off the top of my head, we're the operator on 9 of the projects with Eldorado Gold, Claw Lake, Cook Lake, Murdoch Creek, Victoria Creek, Blue Mountain, Baden Prospect, Island 27, Matachewan Prospect, Plummer Prospect. I think that's 9. I hope so. So we're the operator on those. Which ones am I most enthusiastic about? The Claw Lake Prospect. There's reasons that go back 20 years for that. Continue to think very highly of our potential for success on that one. Mind you, the assays are pending for the most part from our 2023 program. Which other ones are we the operator on? A bunch of properties in Quebec. Most of the companies that are our partners were impacted by the forest fires this past summer in Quebec in particular. So not a lot of work was done on those to advance them, other than the Quebec nickel one. And they too lost 2 months of their program. But most of the other properties were the operator on.
And how much in operator fees and other cash payments is Val-d'Or expected to make in the next 12 months?
Well, it's easier to answer with one specific example. The Eldorado Gold option or joint venture, we receive a 10% operator's fee for the portion that is under our management. So that's the 9 properties in Ontario. And the option payments, well, there are 4 agreements. Each one of them has option payments required. A company like Eldorado Gold doesn't typically issue shares, so the option payments come in cash, which we don't mind. And it's $100,000 a year for the one agreement that was done this year, but there are 4 agreements in total. So I'm not sure what the global number is, but it's straight line math, typically $50,000 a property, et cetera, per year.
And then I had one question relating to some of the battery metals claims that you mentioned. So lots of lithium claims being staked, particularly in Quebec. Is Val-d'Or participating in the lithium staking rush?
Not at this time. It was something that we had looked at early and weren't that enthusiastic about. Not always right. And I'm not sure that means that I'm wrong on this one either. I guess the proof remains to be seen. Mind you, there's been significant success. There's no argument that Patriot Battery Minerals and Winsome Resources and Azimut have each had some success in James Bay. But James Bay isn't an area that's as close to the Abitibi Greenstone Belt. We did work there in 2004, 5, 6 with Golden Valley Mines. We found it prohibitively expensive in terms of helicopter fees and drill mobilization costs. That was for a gold project. We vended that project and got all of our capital back. And I promised myself I would not go back there without a very compelling reason. And even after looking at the general geology 3 years ago again, with a view towards what's now referred to as critical and strategic minerals, didn't really see the opportunity. I certainly got that wrong because the aforementioned companies did enjoy great success. Mind you, a lot of the companies that are working in James Bay, Quebec right now are Australian, amazingly enough. You can't find a place on the planet Earth that's further from most of Australia than James Bay, Quebec. But for reasons that relate to their own geological expertise in Western Australia, they were very quick to recognize the general geological conditions in James Bay as being similar to what had created a lithium rush in Western Australia right at the beginning of COVID, more or less. So they were the ones that jumped in Quebec for the most part. But no, I missed that bus.
You can't get them all.
No.
I had a question going back to your strategic partnership with Gold Royalty. So in April, you purchased properties from Gold Royalty. Were any of these properties then part of the option package to Eldorado?
Oh, that's a clever question, actually, because you've tied a whole bunch of different themes into that. Yes. So I guess
maybe you could just elaborate a bit on that whole
a better
transaction.
way to describe it is that, a year after Gold Royalty had acquired Golden Valley Mines. And why did they acquire Golden Valley Mines? Because Abitibi Royalties owned a 3% NSR in Odyssey and part of Canadian Malartic. That was the basis for the transaction. Who controlled Abitibi Royalties? Golden Valley Mines. So the way to acquire Abitibi was to acquire both. And that's what Gold Royalty did. But along with that acquisition, they also ended up with 17, I think it was, properties and joint ventures that Golden Valley Mines was also working on at that time. So a year down chronologically, a year following the transaction, they begin receiving notices from First Nations communities, Ontario Ministry of Natural Resources, the Quebec Ministère des Ressources Naturelles, et cetera. There are land renewal notices, taxes, mining exploration assessment credits due to be filed. That's not Gold Royalty's core business. And I think they started to find that some of that was quite onerous and that they're not an exploration company, but suddenly had exploration company responsibilities. And certainly being the proponent of the properties from the outset, 30 years ago in some cases, I had staked them as a prospector, carried them forward, formed Golden Valley Mines around them. They ended up in Gold Royalty. I pitched them on vending the properties back to us, except now the us is Val-d'Or Mining Corp. And so that was the strategic relationship. Became attractive to them because it was a way they could retain a royalty, which is their core business. And it was a way that Val-d'Or Mining Corp could increase its footprint in the Abitibi Greenstone Belt, which was timely because part two of your question, that was exactly when Eldorado Gold were expressing interest in some of the properties around Matachewan, Ontario, and Kirkland Lake, Ontario, and some of those properties were in that basket. So yes, that's the genesis of the transaction, not just with Eldorado Gold, but also the basis of the transaction strategically with Gold Royalty Corp.
Thanks for that. And then there was an audience question that I wanted to get to. So I know it's impossible to say for certain, but is there any insight into approximate timelines for when there might be an operating mine on one of the projects? Maybe you could give us a basic understanding of how long it takes to advance a property in the Abitibi from where you're at in terms of grassroots to potential production.
I absolutely love that question. So every night when I go to sleep, somewhere in that is a dream that has something to do with one of our projects becoming a mine. So that's the way every night is. That part never changes. Most nights currently, because it changes with commodity prices and everything else. And I'm serious because these are constants in our mosaic. We're always thinking about which one has the best shot. What could we do to enhance that? How can we reduce risks? How can we be the shepherd that steers the sheep into, the environment that we want? And well, which one has the best shot? It's really hard to say, and it depends on commodity prices. It takes more than a decade most of the time for a project to go from concept to mine or producer. There are some very good examples that beat the timeline, and they're the biggest mines in North America. So Canadian Malartic was under a decade from idea to production. And so is Odyssey. Odyssey mine is going to be well under a decade from discovery of the East Gouldy zone to full production. And they're together the biggest gold mine in the history of North America. So that's right now at this time, you can take a mine from discovery to production in under a decade. Realistically, it usually takes more than 10 years. For one thing, junior companies struggle to raise capital. Fortunate for Odyssey and Canadian Malartic, they're owned by Agnico Eagle, who are very well capitalized. Usually, junior mining companies have to go to the capital markets to raise funds. So it comes in increments, which takes longer and depends on success. Each successful program leads to more capital raises. But typically, by the time a BFS, a bankable feasibility study, is done, if you can bank it with a banker and raise the money, typically you're within 3 years of anticipated production. And so those numbers are more foreseeable. There's lots of examples through the mining industry spectrum of development companies that went from discovery idea to bankable feasibility study in around 7 years. So 10 years is still attainable, although difficult for junior companies.
Okay. I figured that you're always dreaming about the Habs winning the Stanley Cup, but I guess there's
well, tonight's game one. They play New Jersey, but the beginning of hockey season is always good to put a spring in our step. And obviously, because we live up north and the seasons are significant influences, winter being a key one. A lot of people in the south think that you can't do much in winter, but in fact, it's the opposite. When the lakes and swamps are frozen, that's the best time of the year to conduct a lot of exploration work. So we're happy the weather's changing.
Great. I had one other question that I wanted to ask you, and maybe we can wrap up with Catalyst. So in August, you announced an NSR purchase agreement canceling royalties across the portfolio. Can you describe this and the rationale for it and the implications?
Yeah, and I'm proud of that one too, even though it's completely self-serving. So the truth is, as I mentioned several times, Canadian royalties and independent prospector and having staked properties and tried to keep them and get them back over periods of time and transactions. But over 30 years, a lot of things change. And some of the properties that are in the Eldorado Gold transaction with Val-d'Or Mining, I originally staked over 30 years ago as an independent prospector while still in university. And so I owned the royalty on them, having staked them as the prospector. And so now you move forward into Golden Valley Mines, who acquired some of those properties again. And so the royalty still existed. And then Golden Valley spun out 3 new companies, of which Val-d'Or Mining Corp was one of them. And Val-d'Or Mining Corp acquired those properties for the same business reasons that Golden Valley did, for the same business reasons that motivated me as a student to stake them and acquire them. We thought that the geology was compelling and would enable a transaction to cause significant exploration to create value through royalties. And so now we're 30 years later and constantly in negotiations with companies like Eldorado Gold. It was a bit embarrassing through conflict of interest and the rest of it. They say, but you own the royalty, but you're the president of the company. And then you have to explain, well, that was 30 years ago, that was this and that. And ultimately, it was the independent directors of Val-d'Or Mining Corp that proposed a transaction to extinguish the royalties. So the royalties, I gave them up. I received shares or will receive shares. And that suits me fine. My favorite company to own shares in would be Val-d'Or Mining Corp. So more shares is good by me. Although the royalties were good to have too. And I didn't mind owning them for, in some cases, more than 30 years. But it made the transaction with Eldorado Gold doable. And in fact, said a different way, it might have been difficult to have concluded without extinguishing some of those royalties. So on the one hand, I had an offer in front of me from the independent directors. And on the other hand, I had my arm being twisted behind me saying, not sure that we'll be so motivated if we don't actually reduce the royalty burden. So there you have it.
Makes sense to me. One last thing, Glenn, if you could just for the investors tuning in, list some of the potential catalysts and news flow coming for Val-d'Or or some of its partner companies over the coming months.
Certainly. So why buy shares if it weren't for catalysts? So what are the catalysts that are most imminent? Well, certainly there'll be news flow from the Eldorado Gold joint venture by virtue of the fact it's the largest joint venture in our portfolio right now. So thousands of samples, soils, rock, prospecting, reconnaissance, some detailed mapping done at different showings, all of that leading hopefully towards what we anticipate to be a drill program next year. So catalysts, certainly getting that news flow out and helping shape the story and vector towards a drill program and explaining to investors why this property, why not that property. So that's a key part of what we anticipate to be the news flow for the next 12 months. Quebec Nickel, given that they lost 2 key months in the summer, have been very aggressive to complete 5,000 meters in the last month was when they announced that. So I expect that that will be a significant catalyst for news flow, given that we're coming up towards the end of the year. Usually a good time for small companies to raise flow-through capital. And given they have to do the capital raise to spend money on that property, probably a good anticipation of a catalyst that's in the near term. And other than that, our other private going public partner like Juno Corp going public, that should be a key catalyst given the Ring of Fire is back in the news again. Ontario has a different government that has had more success, more vigor in confronting the potential of the far north. And certainly there's a lot more talk about Ring of Fire now than there was 5 or 8 years ago. So we expect that Juno will begin making a lot of noise and we'll ride that one as well. And any other properties that we continue to look at and stake. So we're always looking at different opportunities, including lithium.
Great. Well, I think that's a really good update. Glenn, is there anything you wanted to discuss today that we didn't get to?
No, and I thank you again for the opportunity. I think what's important is to think about the business plan. You know, every junior mining company raises capital and spends capital, does a little bit of exploration, crosses their fingers, hopes for the best. We do that in a very subordinate kind of way. The dominant theme for us is using transactions to create the value. Transactions with third parties, arm's length, prevent the dilution to share capital that destroys most mining companies. That's why 82 million shares after 12 years. So it's significant that you use other people's money on a grander scale to achieve more results and to create the royalties. So our business plan isn't just a pie in the sky dream. We've had success with it 3 times in the past. And now it comes down to the rocks. So we're better funded in terms of exploration than we have ever been, going back to the beginning of our journey 20 odd years ago. So budgets being spent on our properties totaling current sums of over $40 million over the past 12 months, looking forward for the vestings of these. And we've never had that kind of potential spend. So I'm very enthusiastic about what we hope to achieve based on the business model.
Great. Well, I think that's a really good place to leave things off, Glenn. Thank you so much for your time. Thanks, everyone who participated. If anyone would like a one-on-one meeting or has some questions, feel free to reach out and I can certainly arrange that with Glenn. And I hope everyone has a really great week. And good luck to the Habs tonight.
Thank you. But good luck to anybody who's a hockey fan. Thanks. Over and out.